I'm going to talk about 5 stocks that I believe are providing wonderful opportunity going into next week so that you're prepared. 3 of them are going to be wonderful cash secured put opportunities. One of them is a LEAPS call option opportunity that I may be taking. And then the last one is actually a brand new stock that may be added to my portfolio. I'm also going to dive into the news, how that's going to be affecting the markets going forward. And then we're going to dive into my portfolio results for the month so that I could show you transparently exactly how I'm doing. So let's jump into it. As you can see, S&P 500 posts 3rd straight losing day as traders eye Middle East tensions. Obviously, there's some risk going into the weekend, and we're going to talk about that. But I do believe that's a wonderful opportunity to take advantage of any dips on our favorite stocks. So before we jump into it, if you aren't subscribed to the channel, make sure to do so down below. And then also, if you get any value out of this video, please hit the thumbs up button for the YouTube algorithm. That really helps these videos get pushed to more people. Now, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results are not typical. So let's dive into it. CME FedWatch tool. This basically shows the interest rate cuts, the futures for interest rate cuts. And as we can see, September interest rate cut odds have increased. So this is 81%. Potentially, we are going to get an interest rate cut in September. And then December is 94%. So that's what we want to see in a typical bull market. We want to see continuous interest rate cuts. Cheaper money means businesses could borrow at cheaper rates. Consumers can also borrow at cheaper rates, and there's more liquidity provided into the stock market. So that's what we want to continue to see, and that's what it looks like we're seeing with 3 cuts being predicted as of next year as well. So if we look at QQQ, which tracks the NASDAQ 100, we can see that we are taking a little bit of a slowdown, a little bit of a pullback here on the index, and the RSI is heading towards this, it's creeping towards the oversold area, not quite there yet, obviously. And the MACD is showing some bearish momentum. So I do believe that next week we may see a little flush on QQQ to shake out the weak hands, kind of reset the market before the next leg up. I do believe QQQ might head down to 520, which will provide some ample opportunity in the 5 stocks that I'm about to talk about. But first, I want to talk about VIX as well. VIX is showing, there's elevated fear in the market. We're still trading at 20, which is above this area of confidence and greed. So options premiums are very expensive, which is good for option sellers and a great time to take advantage of that in this current environment. So let's talk about the cash allocations, my personal cash allocations, and how I maintain safety when trading options in this environment. And remember, again, this is for educational purposes, but if we look at the VIX levels for 2025, 2026, you can see that the VIX is trading above that 20 area going into next week. So for me, anywhere from 80 to 100% allocated. I'm currently 90% allocated, and I feel comfortable there. So 10% cash on the sidelines, ready to go in case there is a little bit of fear over the weekend. Maybe some geopolitical tensions affect the market on Monday. I'll be able to take advantage of that with the cash I have set aside. So let's go ahead and take a look at the current portfolio. So for transparency purposes, I want to show you my current progress for the month. So this is the portfolio. We're going to go into the realized gain and loss as of today, as you can see the results for today. But I want to show you this whole month so far for transparency purposes and educational purposes. As you can see, obviously results are not typical, but we're going to search and see. This is the net gain for the month. Short-term net gain is right here. So we're doing pretty well, and I'm hitting my my monthly goals for this portfolio. But if you do want to learn exactly how I'm able to do this, that will be at the top of the description down below, Options Trading University. You could watch this training video right here and even book a call with us, or watch some of our client testimonials here. We upload new client testimonials every week. And if you want to see how our group looks, this is kind of how it looks. We have a post your profits section where clients participate there, as you can see, daily. And we also have the Ryan's trades and Leaps entries and exits so that clients can follow along. And if you want my free trade ideas, those will be on my Instagram and my free newsletter, which are also down below in the description below this video. Now let's go ahead and jump into it. Now the first stock that I believe is headed much higher. In fact, has broken out of this classic bull flag pattern is Hims and Hers Health. So Hims is the ticker. It's a telehealth company, wonderful profit margins, great valuations, and I'm really liking this company. So I made a few adjustments in the portfolio for this expected move upwards. I do believe we are headed to this $72 area in the next week. So this is gonna happen most likely pretty fast. If not, it'll head somewhere here, build up some more momentum and consolidation, and then we'll head much higher. But that's currently what I believe this is doing, because we made a bullish crossover on the RSI a few days ago into this week. And then as you can see, there's starting to be a bullish crossover on the MACD, which is a great momentum indicator to add to your charting platform. So, it definitely looks like Hims is headed much higher from here. So I made a lot of adjustments, and I'm going to show you exactly what I did in the portfolio. But again, this is not financial advice. This is for educational purposes only. So here's the portfolio. We do have Hims right here. The current portfolio size, or collateral size rather, for my cash secured puts is this much. So this is currently the largest position in my portfolio, which takes about 14%. And you could see that I feel safe at the cash secured puts at the 50 strike and even the 54 strike. So I rolled up all of my cash secured puts that were at the 48 and 47 strikes, even though we had 20 days left, and I rolled them up and out to basically collect some more premium. And I went out to July 25th to this 54 strike. So as you can see how much I'm collecting there, 229, and you could do the math there on your own to see how much that return is, but that's a 22 delta. I felt safe there. That met my return profile, and I felt very safe at that level, considering that 54 is gonna be somewhere around this level right here. Okay, and the stock would basically have to come down, let's just see how much it would have to come down, about 15% for me to get assigned on those shares. So I felt comfortable selling a cash secured put at that level, collecting that premium. And if I get assigned, I get that 15% discount on the stock, which meets my goals and strategies. So I really like that. Strike price seems very doable at that price. So Hims, again, the largest position in the portfolio, and I feel very excited for this stock going forward. A lot of good news around this stock, and I do believe that they are going to grow into this bull economy. So the second stock is going to be Apple. All right, more of a blue chip name for my portfolio. Had a nice little run up today, and I do believe this will eventually turn around. It's kind of consolidating between this 195 lower Bollinger Band and 205 area. Just has been literally within this area for the past month, okay, even almost 2 months. So this is a wonderful stock to take advantage of because I'm able to basically collect income on those cash secured puts at the 195 strike, and then sell the covered calls at the 205 and 210 strike, and just kind of ride it as it goes sideways. So if we dive into the portfolio, okay, you could see that I have the 195 puts that I sold today, collected this much, and then I also have the 210 covered calls on my 200 shares at a $210 trade price. So I did get assigned on those at 210. So again, pretty significant part of the portfolio is Apple. And I do believe that Apple is headed higher in maybe the next 2 or 3 months. It's going to take a little bit for this stock to get some momentum. I do believe institutions and hedge funds are the reason. The lack of participation is the reason why Mag 7 stocks are just kind of trending sideways right now, not really doing much. But once the institutions and hedge funds plow back into these safe blue chip names, okay, then we will see not only the market ripping much higher, but we will see potentially Apple, Amazon, Google, the Mag 7 heading higher from there. The next stock I want to talk about is SoFi. SoFi saw a massive run last week, going up. Let's see exactly how much it went up just from last week. About almost 10%, okay, and about 9%, and kind of broke out of this 1480 region. So I had to make some adjustments. The PE ratio on this stock is still extremely low, 36, and I do believe that it's going to head back up to 17, 18 within the next maybe month or two, okay? And how I'm playing that in the portfolio is, again, I sized up on this position, as you could see right here. That's the current cash secured put collateral. But I basically rolled up all my 13, not almost all of them, 13 puts to the 14 strike, okay? So again, if I were to get in today, probably next week, I'll roll these 13s up. I'll probably go out July 25th. Just keep in mind that I believe earnings are somewhere around this time. I think they're on the 22nd or somewhere around there. So you do want to make sure earnings, that you're aware of that strike price, but in that expiration. But I'd go out to July 25th, and I'd either grab the 14s or the 14.5s, and those are going to pay out. Those would pay me out 62 or even $46 on those potential strikes. So I'd probably feel safe going to the 14.5, getting a little aggressive in anticipation that SoFi is heading up to $17, $18, okay? And if I did the 14.5, that would get me down here, okay? So not too far away from the stock. It's actually pretty close to where the stock's trading. But if we look at percentage-wise, that would be about a 6-7% discount, okay? So I'm fine getting assigned at that 14.5 level, and SoFi is definitely one that I've scaled up in the portfolio because it hasn't breached previous all-time highs. Same with Apple, obviously, and HIMS still hasn't breached previous all-time highs. So those three stocks I feel safe going a little bit bigger on versus, stocks like the fourth one we're gonna talk about, which is Palantir, okay? Palantir, wonderful company, one of my favorite stocks in the portfolio, but I definitely have reduced my position size in this particular stock because we're at all-time highs, okay? We're at all-time highs. So, I don't know how much longer this thing could just keep going up before a big, 15 to 25% pullback. So that's kind of what I'm anticipating, is that, eventually investors will get a little bit tired, maybe take some profits here, and this thing will come down, hopefully, to this 128 region. I'm seeing this trend line down here. If we get an opportunity, potentially next week, we just had a bearish crossover on the RSI, okay? We're starting to form a bearish crossover on the MACD momentum indicator. So if we do, get a nice flush down to 130, maybe even 129, this would be a safe place for me, okay, and my return profile to potentially pick up some LEAPS call options. So I do want to wait until this happens, and then I feel fine, riding this momentum stock up with a quick LEAPS call options play. So that's what I'm waiting for. If we don't get that entry, then I'll continue to have my current position. As you could see, still pretty, still a six-figure position here, but definitely sized down from where it was. We have basically 9 cash secured puts at the 125 strike, and I'm just riding these out, until expiration or close to expiration. But if we do get that dip down to 130 or 129 next week on a nice flush on QQQ, I'm probably going to go out to, Jan 15, 2027, okay? And I'm going to grab most likely this 125 strike LEAPS call option, okay, which I would have to pay $51 for, okay, times 100. So, I'd probably pick up a few of those and then ride the stock back up, okay? I'd probably ride it back up to this 140 area, kind of where it's trading right now. So it'd be just a quick little pop. Maybe I sell 2 of them, keep 1 of them for a longer term hold. But that's typically how I play the LEAPS. I play them for, the quick bounce, and I don't hold on to them too long, okay? Now, if the stock continues trading down at this level, that's why I went out so far in time, so that if I do have to hold them, that's fine. I have 2 years, and I'll most likely be fine on those. So that's going to be the 4th stock. Now let's talk about the 5th stock. Typically not a stock that I would, trade, But this was an IPO stock, which is Circle. Okay, this thing is absolutely mooning. It's going much higher, and there's a lot of risk involved with stocks like this being an IPO and being at all-time highs. Okay, but I do want to talk about it because it's a popular stock, and it also is a profitable stock, surprisingly enough, as an IPO. Sure, the PE ratio is in the 2000s, but they do have a lot of cash on hand. So let's talk about Circle, okay? Because I think they're in a very interesting sector, which is stable coins, and that because Congress, just approved the act that basically is going to help the U.S. move forward with stablecoins. I do believe that this potentially is a play, okay? So it's a stock that is involved in the stablecoin sector. So what I do like about them, 848 million cash and equivalents, okay? They do have net margins, profitable net margins, but the market cap's already 43 billion, so this stock definitely has rallied quite a bit. But they're partnered with, Stripe, New, MoneyGram, Binance, Coinbase, Solana, right? And all of these different, companies. And also, if you look at CoinMarketCap, okay, they're already, they're, according to market cap goes, they're the 7th largest coin because they're a stable coin, right? This is where everyone takes profits and they rotate it into this coin, USDC. All right. And basically Circle, what they do with that capital, with all that, liquidity, is they put it in treasuries and they're earning 4 to 5%. Okay. So it's a pretty easy to understand business model. And that's what I like about it. But again, I'm not going to be chasing it up here at all-time highs. I know it popped up like 20% today. Not going to be chasing it. But if we do get eventually a nice little pullback, some stabilization, that's what I want to see, kind of like we are seeing in CoreWeave, a little bit more stabilization. That's what I want to see. All right. Then, I feel comfortable selling some cash secured puts there. So if you look at Circle, okay, the premiums are extremely high because the implied volatility is extremely high. The implied volatility 7 days out is 199%, right? So if you go 35 days out, you're around the 160% mark, and you could see that you're on a 30 delta. If I sell a 30 delta cash secured put, which would be the 210 mark, I'm collecting $31 per contract times 100. So it's a significant, significant premium there. But if we look at the stock, 210 would basically get me down here as of today, and it's a little bit too high for me. So the stock would have to come down 12%, which can happen in the blink of an eye with an IPO type stock like this. So you definitely have to be careful with this. Obviously, results are not guaranteed on especially these stocks. You have to be careful, but definitely one that I wanted to put onto my watch list as a potential addition to the portfolio going forward on any pullback. So if you enjoyed this video, make sure to give it a thumbs up. I look forward to seeing you in next week's video, and take care.